Hello to everyone. It's great to be with you, even though it's only virtually. We're gonna talk today about PTA insurance. We're going to talk a little bit about why you need insurance and how the different coverages protect you. Okay, so first we're going to talk about why your PTA needs insurance. This first bullet says that PTA needs insurance to protect the assets of the PTA and the personal assets of its members. When we tell people this, what we usually hear back is, why do we need to protect our personal assets? And we have to explain to PTAs, if they're having a fundraiser and someone gets severely injured and there's a lawsuit, that the attorneys are going to name not only the PTA, but they're going to name any of the PTA members that were involved in that event. And if the event is happening on the school property, they're also going to name the school in the lawsuit. So it's important to know that this policy doesn't only protect the PTA, but if you're named in a lawsuit, it's going to protect your personal assets like equity in your home, your 401k, savings, things like that. So an important reason for insurance. Second bullet here is, anyone can sue for any reason, and they usually do. That's where we get the term frivolous lawsuits. So regardless of how tight of a ship you think you run, you need to know that there's always a risk that someone could sue you for something that you don't feel like you should be sued over. The third bullet says PTAs are not immune from liability. A lot of PTAs will tell us that they don't think they need insurance because they're a charitable organization or a nonprofit, or they've incorporated. And while all of those things might be somewhat of a deterrent or somewhat of protection from a lawsuit, it doesn't mean that they're completely immune or could be immune from a lawsuit. This next bullet point is the biggest misnomer of everything we hear from PTAs, and that is, we don't need insurance because we're covered by the school's insurance. And what we find is typically school insurance does not cover the PTA. Our recommendation is, if you think you're covered by the school, our recommendation is you make a list of all of your activities that you have throughout the year. And if you have a fall carnival, underneath fall carnival, list all the activities within that carnival, like dunk tanks or bounce houses, inflatable slides, just all those kinds of things. And on this list, don't leave off your fundraising money. So if you raise $10,000, $15,000, $20,000 a year, put that on the list, take it to the school, sit down with them and say, if somebody gets injured at any one of these activities that we have, does the school insurance cover us? Or if somebody embezzles our money that we raise during the year, will the school cover us? And when the PTA goes through that exercise, what we find is usually there's no coverage by the school or very, very little coverage. This last bullet point says that the insurance will pay your attorney fees to defend you. So whether it's a frivolous lawsuit or a very serious lawsuit that you might be negligent for, the insurance steps in right away and pays the attorney fees to defend you. Our general liability policies, they vary a little bit by state, but they average about $150 a year for general liability. We pay attorneys $300 to $500 an hour. So you can see that purchasing a general liability policy for $150 a year is a good investment to avoid, $300 an hour for attorney fees. Next, I'm going to talk about the kinds of insurance that you should consider. And there's really four policies. The general liability policy, which has two endorsements. Endorsement meaning additional coverage you can add, the extended medical payments, and the immediate liability. Then there's officer's liability, personal property insurance, and the Fidelity Bond, or also known as crime insurance. So we're going to talk about each one of these individually. First, we're going to talk about general liability. What does general liability protect you for? It's really pretty simple. It protects you from lawsuits resulting from bodily injuries or property damage. So let's go back to the fall carnival. If you're having a fall carnival and children get hurt in a bounce house, okay, well, that's bodily injury. So the general liability covers you for that. If you're having the fall carnival at the school and during your carnival somehow you damage or destroy school property, that's a general liability claim, and the policy will step in to repair or replace that school's property. Who needs to be protected from general liability? Well, not only does a named insured need to be protected, which is typically the name of the PTA, but as I talked about earlier, you need to protect all the members, volunteers, and/or employees in case they were named in a suit. If you went down to a local agent in your town and purchased a general liability policy for your PTA, most insurance agents that are not familiar with PTAs are just going to issue a policy naming the XYZ PTA as the named insured. And again, the problem with that is all of your members and volunteers are not covered. So you need to make sure that whoever you're buying general liability from, and that everybody's covered. We get a lot of questions about policy limits. What policy limits should you have? And we recommend $1 million limit. Most people or most agencies or insurance companies can issue higher limits, but we've been doing this for 31 years, and in 31 years, our largest claim has been just over $600,000. Okay, now we're going to talk about one of the endorsements, the additional coverages you can add to the general liability, which is extended medical payments. What kind of protection does this coverage provide? It provides medical payments for injuries sustained at your PTA event. So again, I'll use an inflatable slide. If somebody gets hurt on an inflatable slide, and they've got a few $100s or a few $1,000 of medical bills, the extended medical payment steps in and pays for those medical bills. And so how is it different from the general liability? Well, the general liability protects you from lawsuits, and the extended medical payments just provides payments for medical bills when there's not a lawsuit involved. And why is this important? Well, we find that if you purchase higher limits of medical expense to help cover medical expenses, because we know if you have to go to the emergency room, the hospital, you can easily run up a $5,000, $6,000, $7,000, $8,000 bill. And if you have these larger medical payment limits, and you can take care of people's medical bills, then in most cases we see that you're able to avoid a lawsuit. Extended medical payments. What policy limits should you consider? Again, it's really up to each individual PTA. It really depends on what sort of activities you have throughout the year. If you don't have any fundraisers and you just meet once a month with parents and teachers for a monthly meeting, you probably don't need the extended medical payments. But if you're having multiple fundraisers, particularly carnivals, this is something you should consider. And standard limits that are offered that you should consider would be a $10,000, $25,000, or $50,000 limit. The next endorsement to the general liability, or another coverage you can add to the general liability, is media liability. What does a media liability protect you from? Well, it's a liability policy, so it protects you from lawsuits resulting from social media. And the types of risks it protects you from are posting photographs without a release, using trademarks, logos without permission, misrepresentation of information, or making confidential information public. So the types of social media you'd be covered for would be, Facebook. A lot of PTAs have their own PTA website, so you'd be covered there. LinkedIn, YouTube, Twitter, Instagram, and others. So these are just some examples of social media that you might be using or could use, where you might, as I said, post a picture or use a trademark without permission, or post misleading or wrongful information. The next coverage I'm going to talk about is the officer's liability. And again, this is a liability policy, so it's protecting the officers from lawsuits resulting from wrongful acts or inappropriate actions. So again, some of the situations that officers could become liable for that the policy covers: inappropriate use of organizational funds, wrongful acts, misleading statements or negligent acts, discriminations, not following your bylaws, or just misrepresentations. So as leaders of your organizations, you're running your organization, you're making decisions how your organization is going to run. You're making decisions on who you're going to do business with, vendors you're going to hire. So all of these these decisions that you're making, someone could allege that it's wrongful or inappropriate. And this coverage, I think, is a little hard to understand, but I'll give you one real life claim situation. We had a PTA that was having a monthly meeting. They thought that a member was going to show up that might get very disruptive, might even get physically violent. So they contacted the police. They explained the situation. And the police said, well, we'll just come and show up at the meeting. We'll sit in the back of the room. And this person appears to be getting out of hand. We'll just escort him out of the room. Well, make a long story short, that's what happened. A couple months later, this person filed a lawsuit against the PTA, alleging that their civil rights had been violated because they felt like they had as much right to be in the room, voicing their opinion, as any other member. Well, this wasn't a general liability claim because the police, while escorting this person out of the room, didn't injure or rough this person up. So there was no bodily injury, so it's not a general liability claim. But it's an officer's liability claim because someone took exception to a decision that the officer made. They claim this was a wrongful act or inappropriate action. So that's officer's general liability. Next coverage I'm going to talk about is the personal property insurance. And what does the personal property insurance protect? It protects the property, specifically personal property owned by the PTA, from loss due to damage of an accident, theft, or natural disaster. So these are just some of the things it covers. A lot of PTAs we talk to start out by telling us they don't think they really need personal property because they don't own anything like a popcorn machine or snow cone machine or auction items or anything like that. So we ask them if they purchase fundraising merchandise. And in most cases, they say, yes, we do. And we explain to them that if you're buying from fundraising merchandise, from the time you take possession of that fundraising merchandise to the time you distribute it, you're responsible for that. We have a claims example where a PTA purchased $10,000 worth of wrapping paper as a fundraiser. They took possession of the wrapping paper on a Friday afternoon. They owned a small metal portable building that they had kept behind the administration office at the school. They put the paper in the building with the idea that Saturday morning the kids were going to show up at the school and they were going to distribute the paper to the kids. Well, overnight there was a really bad thunderstorm. The building leaked and it damaged or destroyed most of the wrapping paper. Well, as you would suspect, the fundraising vendor was not very sympathetic and still wanted their $10,000. So the PTA had to purchase, unfortunately, they didn't have property insurance. And so they had to purchase an additional $10,000 worth of wrapping paper. They had their fundraiser, they doubled their money, they made $20,000, but they had to take the entire $20,000 to pay for the two $10,000 orders. Had they had personal property insurance, which generally sells usually for $10,000, usually for around $100. For $100, they would have had the paper covered, and they could have had their fundraiser and made $10,000 profit. So look at our list here, and if you have any of these items or other items that are not on this list, you might think about buying personal property insurance. Fidelity Bond, or as I said earlier, crime insurance. Used to be that our most frequent claims were general liability claims, slips and falls. We'd pay a few $100 medical bills, or if they happen to go in the hospital, a few $1,000s in hospital expenses. That was our most frequent claim. Unfortunately, today, sadly to say, our most frequent claim is bond claims, usually embezzlement of PTA money. So what does the bond insurance protect? It protects your cash or money against embezzlement, robbery, or theft. And who should be covered by the bond? Really, anyone who handles your money or anyone who has access to your money. Again, if you go to a local insurance agent and you buy bond coverage, the typical insurance agent is going to sell you what's called a position bond. So you're insuring a position like the president or the treasurer. So if you insure the treasurer and the president or a fundraising chairman or somebody else in the organization embezzles money from you, there's no coverage because you only insured the treasurer. So it's important to know that you need to really insure everybody in your organization with what is called a blanket bond. So if you buy a blanket bond, then it's going to ensure anybody who handles or has access to your money if they take it from you. This next slide talks about the fraud triangle. I want to talk about this because this is our most frequent situation when there's embezzlement. Typically what happens is there is a stay-at-home mom she has 2 or 3 kids. She's really involved with the school. She's involved with the PTA. Typically she's the PTA treasurer, and dad loses his job. And if they have any savings at all, they go through their entire life savings within 2 or 3 months. And now the mortgage company is threatening to foreclose on the house. They're trying to figure out how to keep the utilities turned on and put groceries on the table. So they're in a very, 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 bad situation, a desperate situation. So the opportunity here is, if it's the treasurer, they have access, to the bank account. The motivation is that they got to pay their bills. They got to keep the house from being foreclosed, and they got to keep the lights on and put groceries on the table. And then the rationale, unfortunately, is that they're not stealing any money; they're just borrowing money, and that surely dad's going to get a job just any day, and in 2 weeks he'll get his first paycheck, and we'll put his paycheck in the bank account, replace the money that we borrowed, and everything will be fine. Well, if that's what happened, we wouldn't have any bond claims. But unfortunately, what happens is dad doesn't get a job after a month, and they need $2,000 or $3,000 to pay some bills. Second month, dad still doesn't have a job, and they need another $2,000 or $3,000. And this usually goes on for about 6 or 8 months before it's discovered. And at that point, 6 months times $3,000, that's $18,000. So that's a lot of money. So it's very unfortunate. Next, I want to talk about some of the ways you can protect your money from loss. And this first bullet point is probably the best internal control that you can put in place to protect your money. And that's have someone who does not have check signing authority reviewing the bank statements on a monthly basis. Okay, so have the bank statement be mailed directly to that person, or have that person come to the school and pick the bank statement directly out of the PTA's mailbox. And again, it's important it's not open so that person knows that it hasn't been tampered with, and they need to go through it and look at all of the checks that are written and look at all the deposits. If PTA had a $10,000 fundraiser, then they should be looking for a $10,000 deposit. And if that deposit doesn't show up within a couple months, that's a red flag. They should look at checks and make sure that checks are not being written to the mortgage company or grocery stores or doctors, things like that. So this is a really, really good control. And because normally if someone knows that somebody else, a second pair of eyes, are looking at that bank statement on a monthly basis, then they'll be less likely to get sticky fingers and take money out of the bank account. This next one it is not only a good control, but it's required by every state parent-teacher organization, and that's conducting an annual audit of your books by an audit committee or qualified accounting person. And if you notice at the end of the sentence, both on the first bullet and the second bullet, there's a word required. Most insurance companies require these two things be done in order for your insurance to be valid. So don't purchase Fidelity Bond insurance and not do these two things, because it will void your insurance in the case where there might be an embezzlement. This third bullet says, have a checking account require 2 signatures. Never take money home. Always have 2 people count money and then sign a receipt. Never sign blank checks. Deposit money daily. Pay bills by check, never by cash. And then this last one is really important. It's become more and more frequent in the last year or so, but double verify emails for money from other PTA members. We've had a number of treasurers who've gotten an email supposedly from the president, and the president is directing them to immediately, send money for gift cards or other purchases. And because the email looks like it's coming from the president, the treasurer follows the directions, sends the money, and then we find out later that it's fraudulent. So be careful about emails coming to you requesting money, and it's always just a good practice to verify directly with the person who's requesting money that it is a legitimate request. How much bonding coverage do you need? And this is really an important point. Each PTA has determine their own level of coverage, but our best practice is to take your gross annual budget revenues and match that to your bond limit. Okay, so whatever dues you collect throughout the year, whatever fundraising money, whatever contributions you get, if that adds up to $10,000, you need a $10,000 bond. If that adds up to $25,000, we suggest you need a $25,000 bond, and so on and so forth. And a lot of PTAs will tell us, well, we never have more than $5,000 or $6,000 in our bank account at any one time, so why would we need $25,000 worth of coverage just because we raised $25,000 of money throughout the year? And the reason is, think about the example of the fraud triangle that I explained to you. Typically what happens is somebody takes, $2,000 or $3,000 per month for several months. So if there's $25,000 running through your bank account over a year, then there's an opportunity there for somebody to take some or all of that money over that period. So the difference between a $10,000 bond and a $25,000 bond generally is not more than about $20. So it's smart to spend $20 extra to insure an additional $15,000, or just to be sure that all of your money is covered. So those are the coverages that we think that are important and think that PTA should either have or look into having. If you have questions, please call our 800 number, 1-800-876-4044, or email us at aim@aim-companies.com, and we'll get back with you within 24 hours. If you're with AIM, we're glad to talk to you about what coverages you have, what coverages you don't have, if you need to add additional coverages, or if you need to increase limits like on your bond insurance. So thank you for attending. I hope you enjoy the rest of your conference. Take care.